Hi, my name is MD Zahirul Abedin. I am an accountant of Chatters Accounting here in Kent. This video you are about to watch is for anyone who is making a tax return as a self-employed person for the tax year 2020-21. In a moment, we'll start a PowerPoint set of slides to take you through the process of completing your tax return. At the end of it, if you got any queries, there will be a contact details so you can get in touch with us. So the first step is that you need to make sure that you are registered as a self-employed with HMRC. Sometimes they refer to this as registering for self-assessment, but it really means the same thing. You will see in the middle of the slide that link to the HMRC website where you can register. And it's important to do this as soon as possible because it's a couple of steps in the process. So it does take little time. At the end of which they will send you a unique taxpayer reference. So you need to go on an activation code to help you make your tax return. You complete a return each tax year, which runs from 6th April 1 year to 5th April the next year. In 2020-21, tax return runs from 6th April 2020 to 5th April 2021. HMRC published copies of the tax return on the website, and as you will find out later, you can also do your return online. Now, a lot of the paperwork both returns, and we will be talking about the main return that you have to fill in, and the supplementary pages you need to do if you're self-employed, along with lots of guidance are available on their website. You may find it helpful to have a copy of the main tax return and the supplementary pages for self-employment in front of you once we get into the main part of this presentation. So download those off now if you'd like to. As I mentioned, there are two ways of doing your tax return. One is to do it online, which is what government tends to prefer these days. And you may find that much quicker and easier if you're happy using a computer and working online. But most of these presentations, we are going to go through the paper version because it means we can cover every question that you could meet along the way of doing your return. As we'll see in a minute, when you do the online one, they tailor the questions, they ask you to fit your circumstances. So some of the questions we are going to cover might not pop up when you do the online return. An important point is to note that deadline dates that you need to make sure you keep to. If you're doing the paper return, you got to have it in with HMRC by the end of October. If you do it online, you have time until the end of January next year. But don't leave it that long. At the end of January is also the date of making payments. So you really need to have your return in before then so that you can make those payments if necessary. There is nothing to lose by doing your tax return early. So when you have got the time, get around, get it done, and get it out of the way. I mentioned about the documents that HMRC offer on their website. There are also a lot of webinars and videos that you can find on their YouTube channel. I mentioned already that when you do the online return, they will tailor it to suit your circumstances. And if you want to see what that might look like, you can break off now and have a look at the video that we have put the link towards the bottom of the page. That's all about tailoring your return. Today we are looking here at the tax return in 2021 for the tax year starting in 6th of April 2020 and ending on the 5th of April 2021. So before you start, it's useful to pull some things together. If you're doing the paper return, make sure you have got the unique taxpayer reference and your national insurance number at hand. You will need to put them on the form and we will see where in a moment. The two key figures that you will need to enter when you come onto your self-employment return are what's called turnover, and that's all the money that's come into your business over the year. So that might be things you have sold and the fees from clients for services you have provided and so on. And against that, you want to log the expenses that you have had in your business. Now, you will also need to tell HMRC about any other source of income that you have got. That might be things like pensions and benefits, if there is interest on savings, or if you have had a part-time job as well as your self-employment. P60 to tell them about the tax and national insurance from that employment. When you come to do the return, there are two parts. A main return, which everybody has to fill in, which is 8 common pages. But as you see, when you walk through it, a lot of the questions you will be leaving blank. And then for every source of income, you have to fill in pages, what are called supplementary pages for each of these sources. And in this video, we will be looking just at the 2 pages you need to complete for self-employment. So here we are with page 1 of the main return. And as I mentioned earlier, at the top of the page, where on presentation slide marked as 1, you need to write in your unique taxpayer reference UTR and the NANO, your national insurance number. The next item over to the right, where on presentation slide marked as 2, was labeled the issue address. It's a bit confusing, but this means your address, the address for your business, or if you're working from home, your home address. And then to the left, marked as 3 on presentation slide, you put in the HMRC address. Then towards the bottom of the form, give them your date of birth and your phone number in case they have got any queries. Presentation slide marked this as 4. The second page is where on this hard copy version, you do the tailoring of your return. You tell HMRC about the different source of income that you have got. So in our example, we are just going to be put in a crossing 2 boxes here. One for self-employment, a cross against yes in section 2. Because we have got supplementary pages, will be put in a cross in the very last box on the page towards the bottom right. In our example, we put in a cross in the no box is for everything else. But just check if you have got income from other sources, and particularly an obvious one would be part-time employment, then you need to put a cross in the yes box for those other sources of income as well. In page 3, questions 1 to 7 asking you all about the interest that you have had. The big point to take away here is that ISAs are not taxable. So you don't have to put on your form the interest that you have received in an ISA. But if you have had interest on a bank account or some other savings account, that needs to go in here. You need to tell them how much interest you have had and if you have paid any tax on it. In questions 8 to 10, you tell them about your state pension, and in questions 11 to 12 about any company pension you have received. And in both of these cases, you should get a form from the pension provider telling you exactly how much money you have received during the year and how much tax is already been taken off. And if you're on benefits, you need to tell them about, for example, employment support allowance at question 13 and job seekers allowance at question 15. Now, some benefits are taxable and some aren't. So have a look at HMRC website or speak with accountant to understand relevant taxable benefits. So if you have received all the benefits over the year, check out the HMRC taxable benefit list and make sure you answer the relevant questions in the middle of this page of the form. On page 4, we are looking at tax reliefs. And for a lot of people, this won't be relevant at all. It's about payments into particular forms of pension savings, charitable giving, and blind persons allowance. We mentioned earlier that for both this main form and for the self-employed pages, there are guides that HMRC publish. So if you think any of these apply to you, do get hold of that guide to the main tax return that you will find on HMRC website and check out what you need to be entering, or speak with accountant if you are unsure. Page 5 take us on to any student loans that you might have had, and information if you were receiving child benefits is on a higher income. Again, most of those won't apply to people. Well, the one at the bottom might be useful if you are married and your partner's working. If your earnings are less than £12,500 last year, then it's possible that you could transfer some of your tax allowance over to your partner, which would mean that they have to pay less tax. On page 6, you have to declare any tax-free funds you have had during the year. And again, an important bit at the bottom of the page, you can put in there your bank details if you'd like HMRC to repay you for any overpayment of tax directly into your bank account. Otherwise, they send you a check, so do not be bothered faffing about with checks. Just keep them the details there. If you're not sure about whether you think you have overpaid, it's always worth putting them in. You can't lose anything by doing that. Page 7, here you put in the details of an accountant or other tax advisor if you have got somebody like that working for you. And there is a big box at the bottom there where you can write in anything else that you think might be important to help HMRC understand your earnings, income, and tax affairs during the year. Again, the chances are most people won't be entering anything there. But if there is anything particular, that's the place to pop it in. Now onto the final page, again we tell them that we are including supplementary pages, which will come on to with the next slide. So we have put across in box question 21 and then make sure that you sign in the signature box and dated that question 22. Now we are moving over the self-employment return, and this is only 2 pages long, which is really the important bit where you need to tell them the details about your self-employment. So again, if you're doing the paper version, you need to repeat your name and your UTR at the top of the page. Tell them a bit about what your business is and where you're working from. If you started the business during the tax year or the business end during the tax year, then you need to put that information in questions 5 or 6. And in question 7, you tell them the date to which your accounts are made up. Now we know the tax year ends at the 5th of April, so you could put that date in. But if you are keeping your own books, you might be doing it on a monthly basis. And the 5th of April would be in the middle of a month, so a bit tricky. So you can use the 31st of March as your date the books are made up to. And if you do that, then you can use the months that you have been recording your income and spending on, total it all up and say that your accounts are made up to the 31st of March. Just remember, if you're doing that on a consistent basis for the next year, your accounts need to start off from the 1st of April. You can't miss days out. But it can be a lot simpler if you use the 31st of March, so that's an option. Another important question is that next one, question 8, which is about whether you're using what called cash basis. Now, most people are self-employed, have simple accounts, will use cash basis. What that means is you're reporting on your accounts on cash coming into your business and cash going out of your business. The alternative, which is traditional accounts, are based on invoices. So with traditional accounts, you add up all the invoices you have issued to customers and you add up all the invoices you have received from suppliers and declare those. You can understand that there is a bit of difference as you get towards the end of the year, because you might issue an invoice in March, but it might not get paid until the end of April, in which case there would be a difference. With traditional accounts, you would be writing that in 1 year's accounts. In cash basis, it would be in the following year. Cash basis tends to be a lot more straightforward. So we are going to assume you are using that. But just check if you have got complex account and if you are using an accountant, you might be using traditional accounts and invoice-based accounting. So if you're using the cash basis, put a cross in question 8, and now we got to the mitigates. At question 9, you write in what's called your turnover. And this is all the money that's come into your business during the year. And that could be from sales that you have made. It could be from fees that you have been paid. Add it's all on the total to the nearest pound, goes into box 9. On the next important bit, in some ways even more important, of the expenses that you have had, what you have spent in the business. We'll say more about what counts and what doesn't in the next few slides, what you can declare as expenses. In each of the boxes, separating out your expenses into different categories. What you don't need to do that. If you want, you can just total them all up and put the total in question 20 at the end. Now, if you do the online return, that's tend to be reverse things. They offer you the chance to put in the total, but if you want, you have the option to do it box by box as it's laid out there in the different categories on the floor. Obviously, the total is a lot simpler and most people just use that. So self-employed expenses, this is really important. We'll reiterate it later, but the tax that you might have to pay is all based on your profits. It's not based on the income in the business. It's the income less all the money you have had to pay out your expenses. So it's really important that you don't neglect any expenses that you could be claiming, because it might mean that you're paying more tax. So very crude but quick rule of thumb is basically if you had spent money as part of your business, you can claim it as an expense. Now, again, there is a detailed guide from HMRC that's on their website. You can find a direct link to the website from our slide. So as you might expect, things like stationery, your phone bills, your business cards that you have bought, insurance that you have had to take out, any raw materials that you have had to buy, all those sort of things are business expense, and you can claim them against your income. There are, though, a few things that you can't claim as an expense, and the most obvious one is what you have paid yourself. Sometimes for the self-employed is referred to as drawings. So you need to keep the money that you have paid yourself out of the expense list. Some of the things that you don't count. If you have bought business premises, traveling to an office if that's your normal place of work, and thinking of traveling, you can't claim for fines. So if you do get caught for speeding, I'm sorry, but the fine can't be paid as a business expense. You can't claim either for ordinary everyday clothing. If you have to wear a special clothing in your job or a uniform, you can claim that. But if it's just everyday clothes, you got to foot the bill of those. You can't take them as a business expense. And the other one you can't claim for is when you are entertaining customers. So again, just to be the safe side, check out the guidance and make sure you have got it right. One tricky bit when you're looking at expenses that can come up is where you're using something both in the businesses and for personal use. Obvious example for things like your mobile phone and the car. You can only claim the expenses that relate to the business. So for example, if I've got a mobile phone and used it half and half for business and personal use, you could only claim half of the payments you have made for that phone. So you just work out roughly and tell them how much is being used on business purposes. Now, in terms of the car, that's one of the things where you can make life lots easier for yourself. HMRC allow you to claim what are called simplified expenses. At the bottom of the slide, there you will see a link. Again, there is a guide to this stuff. So if you have not got all the details nailed down, it just check out the simple guide that they provide. The main expenses are car travel, and for most journeys and people, that will be 45 pence a mile. So instead of working out how much you spend on petrol, new tires, getting it serviced, the tax, and so on and so forth, you just count the miles you have done on business and multiply it by 45 pence to count your travel expense. You can put that as an expense on your tax frame. Similarly, if you work from home, if you do enough hours, you can claim help towards the cost of the extra electricity, gas, and everything else that you're using up. So make sure you claim those expenses. Now let's move on to the second page of the self-employed return. On the previous page, you said how much money had come into the business and how much you had spent as an expense. On this page, you are looking at the difference. If you are fortunate enough to make more money than you spent, you have made a profit and you put that profit in quotient 21. Or if you are unfortunate enough to have made a loss last year, that goes in box 22. When you do the online return, these sort of things are worked out for you automatically. So you don't have to be doing the calculations. The next set of boxes relates to what are called capital allowances. These are the allowances for buying big bits of kit, which are going to last years and years typically. Now, if you're using the cash basis that we mentioned before, the simple way of doing self-employed accounts, a car purchase for the business is the only possible capital allowance that you can claim for. Again, look at the guidance if you think that applies to you, because capital allowances are quite complicated things to deal with. Fill in the other boxes and chances are most of them will be zeros. And you will keep repeating those profit and loss figures that you come to the boxes further down the table, such as in quotient 28 or quotient 31. Now, the bit at the bottom might be important. If your profits at the end of the year are less than £6,475, you won't be paying national insurance contribution. And that can be a problem because it affects your entitlement to state retirement pension. You have the opportunity here to put a cross in a box to make voluntary national insurance contribution. So the big question is that worthwhile? Well, use the link there on the slot to check out whether you think you are going to hit the number of years you need to get a full pension, and that's 35 years. If you are going to fail short of that number, it may be worthwhile making voluntary contributions at this point in time. So check your record. If you think it would be useful to you, put a box in it, and HMRC will come back and ask you for those voluntary contributions. Well, they are not necessary if you are above the threshold because you are going to be paying national insurance anyway. We have gone through now the paper return. If you want to get a better handle on doing the online return, have a look at the video from HMRC YouTube channel. The next slides are just going to be looking forward rather than dealing with your tax return. We are almost at the end of this presentation. As I mentioned before, key point is tax and national insurance are based on your profits. Now, if in the current year you think you're likely to make a profit, you really want to also think about putting money aside to cover the tax and national insurance that you might have to pay at the end of the year. If you follow the link on the bottom of the slide, it will take you to a calculator where you tell the website how much you think you're going to be profiting each week or month. And it will tell you how much they think you're going to have to pay in tax and national insurance. So it's really useful to make sure you don't get caught out at the end of the year. And just to give you an idea, income tax, you will know normally only be paying when you get above the standard personal allowance, which is at the moment in 2021-22 tax year is £12,570. If your profits, remember it's profits, not income into the business. If your profits are above that well below the £50,270 limit, they will be taxed at 20%. The threshold for national insurance are a bit different. And there are two kinds of national insurance you might have to pay if you're self-employed. One is a flat rate of £3.05 a week if your profits are over £6,515. If your profits are £9,560 or more, then you also have to pay 9% as a national insurance. If you're in the fortunate position where your profits are over £50,270, then there are higher band rates applicable there. So that's the end of the presentation. I hope that's been useful. Do get back to us and tell us if it has been useful, how we might improve it, and if there are other videos you'd like to see us putting together. If you got any queries, do get in touch with us. Chartered Accounting email address is there on the screen. Hope to hear from you soon, and thanks for watching.